The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
As we start off the show, we've been up and down and all around, up to a high of 2182 on the S&P cash, down to a low of 2151. Currently, we're up 13 points at 2176. And monster volume. Just we're already going for 4.3 billion shares, which is about double, or maybe just a hair less double than we normally have at this time. My guess is that we will exceed yesterday's volume. In fact, let me bring that up just a second. There we go. So what did we have yesterday? 6.259 billion shares on the New York Consolidated Tape. I did a little chart today just to show what the volume looked like every 30 minutes during it. I think I can move that here on top of the screen. We'll put it on here. That blue line is yesterday, or purple line. I'm about half colorblind, which will give you a good indication of from the 1st of November now, just how big that was. We'll zoom in even bigger. There we are. Bigger. Huge volume. Probably going to come in line with that today. Now, as we said yesterday, normally massive volume is a sign of not a trend changing, but of an exhaustion move coming. Most of the time, and I did some research on this last night, about 80% of the time, super massive volume ends up in a exhausted market that goes sideways for a while. I went back through them, and there were like 20, 25 times. What we saw was that the S&P moved within a 1% for about 5 days. I'd say that was about 80% of the time. I'm going to do some more work on that. I've always seen it as anecdotal, and remember hearing many people talk about it. But massive volume ends up just being a lot of times not the end of the trend, but if you're thinking about going higher, you need some consolidation. It can also be a top. You can pull back a little bit, go a little higher. We really didn't blow out the highs so much on the S&P, so that is still an option. But volume at highs is finally what we have. So you have to say to those folks that are very bullish in this market that there is a possibility of higher prices. But we're still going to be just a little shy of the all-time highs. And I would not be surprised to see the market pull back. What I hate and why I cannot be short or think that this is some kind of a top that can be shorted at the moment is heavy shorting the last couple of days. It is exceedingly rare to see a top in the market where everybody's short. So normally what will happen is if you do want to short, you want to wait for some kind of squeeze that evaporates during the day. You want to see some kind of momentary thing that just shows you that the entire market's rolled over. You could have kind of thought that earlier this morning, but again, any kind of high we make here, any kind of massive signal of a long-term high is going to give you more than enough time to get in. I'm not going to worry about missing the first 20 points down of an S&P failure here. I would be very careful, though, of thinking that, one, we either break out in the next few days or that we fall apart. Most likely, we're going to see a market kind of trade around in this range. We called it the doldrums in August. Massive volume generally adds to very lighter volume and a lack of volatility, not an increase in it. As I said in my newsletter this morning, this is the Goldilocks in the three bears. You can be too light, you can be just right, or you can be way too hot. And this volume is massively too hot before it gets to the high. Normally what you want to do is see a lot of people, naysayers, and then the volume come in. You don't want to see all the volume come in and then it get there and the volume evaporate. So I am not, if you are trading intraday, you're probably the only way you're going to make money in the next few days, in my opinion. I could be wrong, but I would not be short. I'd say that almost none of the events that I looked for in this kind of heavy volume, which literally is the highest volume we've had in 5 years, maybe 6. So massive, massive, massive volume. But this isn't a previous high or previous low. This is going up to that low, which would be a nod to the bullish side. But it didn't break and continue up 12 points today on the same kind of volume we had yesterday. Makes me suspect that we're still in this trading range. And every time we move up, there's more than willing sellers. Every time we come down, there's more than willing buyers. Again, we'll keep an eye on this volume, but already 4.3 billion shares on the New York Consolidated Tape already. As always, we like to start off the day with a little bit of history.
That it's all just a little bit of history repeating.
And on this day in 1775, the Marines were formed by an act of Congress. They created 2 battalions of Continental Marines. In 1798, John Adams signed the act establishing the United States Marine Corps. And every day, on this day, the 13th, the commandant of the Marine Corps issues a order directing them to have a, what is it, in the honor of birthday, the order summary of the history, mission, and tradition of the Corps can be read at every command. And, of course, what I always like most about the Marines, of course, are the movie Marines. I had something here. What are there? Oh, I had this. R. Lee Army, my favorite Marine.
Today, you people are no longer maggots. Today, you are Marine. You're part of a brotherhood. From now on, until the day you die, wherever you are, every Marine is your brother.
And, of course, my other favorite one is from Aliens.
All right, sweethearts, what are you waiting for? Breakfast in bed? Another glorious day in the Corps. Day in the Marine Corps is like a day on the farm. Every meal's a banquet. Every paycheck a fortune. Every formation a parade. I love the Corps.
Well, you can love the Corps, too. They keep us safe. The brave individuals that defend our freedom. We'll see you in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Put silver wings on my son's chest. Make him one of America's best. He'll be a man they'll test one day. Have him win the Green Beret.
Okay, our engineer's sadly confused. This is the day for the Marines, not the Green Berets, which is part of the Army. Okay, give it up. Tell me you're sorry for playing it. I was actually going to play one more out here, which I thought was, again, my favorite Marine, and that is R. Lee Army. I'd make him director of all armed forces.
I am Gunnery Sergeant Hartman, your senior drill instructor. From now on, you will speak only when spoken to. And the first and last words out of your filthy sewers will be, sir. Do you maggots understand that? Sir, yes, sir.
And that's the way I want to be addressed today. Just say, sir, yes, sir. When you call at 877-927-6648, email me at path@tfnn.com or post a message in the den. Secretary of Defense, I'd go for that. Chief, the Joint Chiefs, yeah, something like that. Anyway, if you haven't been watching the TLT or any of the other bond funds, or not a big bond kind of guy, the TLT, of course, blew out yesterday, down again yet today. I thought we'd find some kind of support around the 127 level. We didn't, and when that happened, everybody flushed out of bonds, and they're desperately trying to get into stocks. I suspect that is jumping out of the frying pan into the fire, but it will take a little while for this transition to continue. But still down. We'll look at the TLT. But, of course, mortgage rates rocketed relative to their average range of movement. It was the single biggest move higher since the days of the taper tantrum, if you don't remember that, in 2013. Virtually all lenders are quoting conventional 30-year fixed rates that are at least an eighth of a point higher. And, of course, this is the first time in about 8 years that we've had a single day where we had a quarter point move with some lenders. And this has only happened a few times. So a massive change out there. I suspect you can put a fork in the housing market if you're looking for a medium to long-term top in that. 2173 on the S&P cash, up 10 points. Other things going on in the markets out here is that the typical FANG stocks that most people talk about. Do I not have? I don't. When we look at these, okay, there we go. Oh, now it just messed up. I hate that when that happens. Now I got to make 4 clicks to get back. Okay, there we go. Boom. Number 2 click. Okay, number 3 click, which is a big click because I've got to scroll over. Okay, there we are. Now one last click to get it in the right format. So, come on. There we go. So what do we have? Yesterday, it looked very much like Apple was going to fail in the first 30 minutes. We had all the volume we had. It broke lower. Today, we are still $2.40 lower on Apple. Amazon is off $29, which is about almost 4%. It's a special case. We'll talk about that. Facebook off $3, 2.5%. Google is off $23, which is a little less than 3%. Microsoft off just 1.7% in all of these. And we'll talk about that also. And Netflix, which is off 6.5 points. So what's going on out here? Well, I wrote about it this early summer. I think it was early summer, June or July. And many of the Wall Street, as they now call them, Silicon Sultans out there, were doing everything they could to defeat the incoming president. I had one thing to say. If you're going to kill the prince, you better kill him before he becomes the king. And it wasn't like just supporting his opponent. This was outright doing literally everything they could, legal and illegal, to make sure that Donald Trump was not elected. This is not very far from the exactly what the robber barons did, who are the predecessors to the Silicon Sultans. They got in, they bought up the newspapers, they printed what they said was the news. In that time, of course, no internet. It is much more difficult to hide or obfuscate from a hungry electorate that does want the truth. Why we are seeing some of these things really get hit, a lot of people are talking about it. Amazon was probably the worst offender. One, they had huge amounts of monopoly issues already going in. They threw huge amounts of money at legislators and election campaigns. So most people just turned their face the other way to a lot of the things that they did were that in any other previous administration, Democratic or Republican, would have basically landed them square in the eyes of the Justice Department with anti-monopoly rulings. I suspect that's coming. Everybody else knows it's coming. There's literally nothing Amazon has touched that they don't want to do. They're now trying. We talked about them buying airplanes, which I thought was the worst thing they could do. So they want to control shipping. They control all the warehouses. They control what goes on. But they've become so incredibly vertical that they are an absolute easy target when you compare them to the big targets of the past. Now, Microsoft probably off the least, just off $1, because it did literally nothing in the election. Didn't support, didn't push, didn't do anything else. They kept their nose to the grindstone, didn't really come out and try to push anything. They basically focused on trying to become a better company and severely outperformed almost all the rest. But from Google trying to manipulate search results to Facebook literally manipulating the news results Every one of these companies at some point, including Apple, have had their hands caught in the cookie jar. They may be facing some issues also with what they did in undeclared helping of a candidate. I don't know how far that is going to go or how far the new administration is going to push it. But because of WikiLeaks, we know so much about what is going on there. As I've said before, Amazon's probably the biggest bullseye on its back. It didn't help that Mr. Bezos hired 30 reporters, and I'll put that in quote, for his newspaper and paid them nothing to do but go after the now president of the United States. As I said, if you're going to go after the prince, you better kill him before he becomes the king, weighing on almost all of these Silicon Sultans stocks today. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, he finally got it right this time. He's at least not playing an Army theme. So he's getting a little bit better there. That wasn't me. That was the engineer. What else do we have going on out here? Of course, anytime there's a lot of confusion and mass movement, those that are willing to try to make some money a little bit illegally are around today. That was a Fitbit. In the past, we've seen this happen before. Most people thought that this hole was plugged. It was not. A little unknown company that hadn't done anything in China had been filed with the SEC and remained dormant. They used that today to push through what is looking like a big phony report saying that they would be buying Fitbit. Of course, it was the stock was halted fairly quickly and came back through. But this is not the first. This is maybe the fifth or eighth time this has happened with one of these dormant companies over in China that we cannot handle. Again, maybe in a coming administration, we will be more vigilant on making sure that all companies that are traded on the New York Stock Exchange or the NASDAQ actually have to comply with the rules and regulations of the United States, whether or not they're in China or not. But we shall see. Anyway, that's pretty much it for the news. We'll get into charts here. We'll look at some of these things that are moving. And, of course, plenty of time to give me a ring and or post something in the den. Later today, of course, we're going to have Andy Heck on the show. Not on my show, but on Tom's show. And then, of course, at the 5 o'clock hour, talked to him a great deal over the last couple of days. And my guess is he's going to have a lot to talk about and how the election's going to change what we see going forward on many fronts. So make sure to check out his show at 5 o'clock. And I think he's early today, isn't he? So he's at, 3:20 with Tom. So a couple of chances to check out my buddy Andy. And maybe he'll talk about our Twitter, not our Twitter war, our texting war of the last few days. I'm going to call it the Great Texting War of November 2016. Anyway, what do we have? I wanted to look at Microsoft first because it was the stock that seemed to be holding up the best. So we'll take a look at that. Actually kind of got down and made a very temporary Gartley pattern today and pulled back up. But I'm not really looking at that as the movement out here. What I am more interested for the most part is just the volume. Came down, finally filled at least lower gap out here. I'm not a big fan of trying to go after this thing up here. It's pretty fairly valued. When you look at the chart on a bigger time frame, I think you can make a case that maybe there's one more gap to be had in this before it sees its eventual high for a while. What else do we have out here? 2171, so we're up 8 points on the S&P cash. Again, by the end of the day, I would not be surprised to see us close out there in the S&P flat on the day and go flat and try to do the same thing for a variety of days, maybe even to Thanksgiving. It could be that long. Facebook was off fairly hard earlier today. It, of course, got down to 115.30, and it's pulled back up mostly. Again, every time a stock goes down, there's someone to buy it. Every time it goes higher, there's somebody to sell it. But for the most part, we are seeing this kind of pull back. I was a little early on my call of peak social media, but I think we're kind of there. There are a lot of other technologies going after Facebook, and I suspect now they're really starting to have more of an effect. Twitter, as much as it was used in the elections, really never had that much impact on the earnings. This thing has kind of gone back up and at least filled the gap. But my guess is this is maybe as good as it gets. Without some kind of buyout, which I do see coming, this company is going to flounder for a while. Other stocks, so we're going to talk about Amazon. I had thought that at least we were going to get down to the 740 range. We talked about that would be the first point that I thought would be you would want to buy it. It got to 717 this morning. Lots of volume. Blew through the 740, although it is hanging around that area right now. What is that? 741.57. Lots of volume. Could you get an ABC out of this? I think you could. But as I said before, within 6 months, I expect this to be back down in the $650 to $600 range. A combination of course, possible antitrust legislation, and spending massive amounts of money to try to get through UPS and FedEx makes me think that not only are they spending a lot of money, but they're opening themselves up to yet another front in antitrust legislation. So let's take a look at Google real quickly. Google does have some competitors, probably enough competitors to make sure that they do not run afoul of the restriction of trade issues. This got all the way back down to where this did gap up and filled its gap from the 29th of July. Did so, 5 million shares on that day, pretty much the same thing. Well, just 2 point, is that right? What do we have today? 4.8. So we're probably going to have more volume than that gap up, which leaves a lot of these companies continuing to be a little bit vulnerable. Many people starting to move out of these FANG stocks and into the stocks like Caterpillar and others, and U.S. Steel. In fact, let's take a quick look at U.S. Steel and see how it's doing today after the massive gap up yesterday. Not a whole lot more, but again, you get all the volume, you get all the move in one move. It doesn't have to have continuation days out there. A lot of times it will just, for the most part, go sideways. So look for some kind of consolidation in some of these others. Let's take a look at Caterpillar real quick. And we'll get to other movers out here. Caterpillar does have a continuation day. I suspect that there were just way too many people short this stock. It broke out, did have volume, a valid breakout in this sector on 19.2 million shares compared to 5 million shares. So you got everything you did. If you're continuing to be bullish on this, you would want a pullback to about $90 to take a look at it. Blasts from the past are back. When we take a look, we'll look at something that people had put out for dead. That's SodaStream. I never thought much about it, but it's proving me wrong today. Huge sign of strength in this. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Question about FCX, what does it show? Shows slightly better energy off the low of October 13th, not massively. We are up here with volume that matches the previous high. That's the $14.06 high of April 29th that had 74 million shares. So again, in my theory of volumes, there's volume that's too cold, just right, or too hot. You would like to see, or typically see, volume that comes in about 150% of the previous one, maybe even 125%. But you want something significant. So we'll see how this closes today on volume. But I think I'd like to see about 90 million shares for a more than just a test of the top. You also need this thing to close over $14.06 today. But today's close is going to tell you a lot. You had a kind of a nice pullback from July 27th. Energy did come out of this stock. I thought it was going to make it back down to the $7, which is where I wanted to buy this thing. No such luck. It did get into that low of April 7th with lighter volume. So kudos to all the people that were on these. But nice move. I just wanted a little bit more, but didn't get it. So, you're going to watch this the next few days, but you want something you want a sign of strength in this. You've got a gap. The most bearish thing that you could have in this is one more gap with light volume up, and then you might have a 3-gap play all the way back down to $12. So whatever happens tomorrow, if this thing gaps up yet another half a buck or something, you got a nice gap up there. What you don't want that thing doing is then closing and starting to head back down on Monday. So why you can play this, what you don't want to do is let this thing go too far the other way, because this could go back all the way back to $12 in a heartbeat. That would be one more gap up, sets up a beautiful 3-gap play. So that's it. Okay. What else? Oh, I'm going to go back to, got a couple of emails I've been answering here during the break. Got those taken care of. What else we want to look at? We looked at soda. Anything else out here? Shake Shack. A few of these fairly new IPOs did better after the bell last night, mostly because they were massively short. What I dislike about pulling the trigger short on the market now, I would rather be sitting on a pile of cash waiting for this market to actually resolve itself one way or the other. We're up 8 points in the S&P cash. Again, I'm not going to be surprised if we see the S&P cash end up just a couple of points up or down over the next few days as we consolidate and digest what is probably going to be a fairly decent congestion area for the market. 4.7 billion shares on the New York Consolidated Tape, by the way. So we're well on the way to getting that 6.5 billion shares, which is, we did 6 months with never going over 3 billion shares. So it's, this is significant volume. But again, the light bulb that burns twice as bright only burns half as long. And you would have wanted to see continuation and then a pullback off this. That we're going sideways with this kind of volume is problematic. But anyway, we'll have to see how the day closes. Now, if we were, and I was thinking of shorting, one of the things I would look at is the IWM out here. This has come all the way back up in the last couple of days, back up to the previous highs, got to 125.40 earlier this morning. I'm going to be a little off of that. Again, a ton of volume. You've got two gaps. The first one on the 7th, the second one yesterday, or actually today. And we're going to get probably a few more of these are going to get one more. Now, if all the volume falls out, you get one up there and then the thing closes back below 125, probably going to be a pretty good indication that this is topped out. Now, there is a theory that probably is somewhat true, and that is that the preponderance of Russell 2000 stocks are U.S.-based. They do not export a lot, and therefore will be much less resistant to a high dollar. So when we look at the dollar today, at 29 cents, we're back up at this $99 level on the dollar. I think it's going to hit 100. I think it's going to blow through 100. And we shall see. But something's got to give out here, and it's got to give fairly quickly. I just suspect that it may be quickly, maybe a relative term, and what we're talking about is 3 or 4 or 5 days from now, maybe into next week, maybe even into Thanksgiving. Could we sit around here going right through and what we went through in August? Not hoping that happens, but just reading the charts and looking at it, looks to me like the conditions that got us right into the doldrums of August all over again. Deja vu all over again. But we'll see how this closes. You've got all the volume in the world. You've got all the movement. Now it's time to just kind of look and see what happens. Other things of interest, let's keep an eye on it out here. Take a look at IBM. Again, if you kept your nose clean and out of the election, you're doing fairly good today in the tech sector. This one didn't really see anything that made me think this thing was going to run. There were some upgrades and a lot of people short. This one does not have a lot of volume so far. It's back up to the 161.16 level today. Energy's okay, but it's not all that exciting out here. This is just in a bigger trading range. Do have some fairly decent energy off this October 18th low, though. I still suspect that you're going to get an opportunity to buy IBM maybe back down into the 141 area, or that's where I think I would like to buy it. Win is the one that really rolled over first and showed all the kinds of problems at highs. Even with higher volume, this thing has come down with significant energy. Finally a little bit yesterday. Even the bounce today, though, has been on lighter volume. We've talked about why this is, and that was everybody got wildly bullish the second that they had the first uptick in 24 months in gambling in Macau. So everybody decides to go all bat. Can I say it? Bat crap crazy. Up to this 109.50. And during that day, if you go through the inter-day volume, you could see that they were just running all the parts out. And, of course, in a day or two, the thing fell apart fairly. But this one was leading the rest of the market in the weakness, especially of China. And I don't see much else happening in here than that. We're coming down and testing, or we did test kind of the lows yesterday. Did do so finally on lighter volume, and the volume was about half. So you've got to probably at least give this one a little bit of time to get back up maybe into the 95 range to set an ABC down.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Back just a couple of minutes left in the day. Got a few emails to go through, and we'll get to those. At least the stocks on those. So one of the other ones was talking about coals. I did look at that earlier. What is that? KSS. It is the leader in the Dow 500 today. Huge volume. I wish this thing, or if you wanted this to be a sign of strength, you want this thing to close over the January 7th high, which is $50.26. It just needed 7.6 million shares, but you still need to close over that high. Looks at the moment like you could have it. And volume's good. You got 15.5 million shares, so you got double the volume, which is okay. I don't like to see much past 250% volume, or again, we get into this whole thing where you just end up in exhaustion moves. But you've got two nice gaps underneath it. Maybe you get one more before the into Christmas season. This thing has been suffering with very bad management. Maybe things are getting a little better there. I haven't been by one in a while, but I will think about it. But nice pattern out here. Lots of overhead resistance, though, as you go forward, because this thing, you know, you see $74.92 on April 6th of 2015, and you've got some massive, heavy volume not that far ahead. We'll zoom in on these. The next big resistance level would be the gap down on 16.5 million shares on, what is that, August 13th, 2015. And then if you make that one, you still have yet another even larger one with massive volume that started this all to begin with 25.5 million shares going back to May 14th of 2015. So if I was long this thing from back at the lows, I'd have to be thinking that if I got 55 out of this, I would be ecstatically happy and run and take my money and run as fast as I could. What else do we have out here? Macy's up a little. So maybe there's just a decent, decent amount of additional wind at the back. Earnings were not good for Macy, but they weren't as bad as everybody thought. This one was not able to hold its August 16th high at $40.55. They had 11 million shares. Do have 15 million shares out here. But again, a lot of these stocks unable to hold their highs. The end of the day is going to tell the story on this one. Does it close above $40.55? But even if it does, I think $44 is the most you could expect out of it now. And I still do not like retail to any extent. It's AZN, maybe the last one of the day. This one had a nice gap down. You know, IBB, all these others, everybody's rushing into them, thinking that since Hillary Clinton's not elected and, of course, the Senate is not in Democratic hands, they won't be going through an endless parade of perp walks into the Senate. I don't know if that's the case or not. Probably less chance, though. But you're down today with 11.5 million shares far. My guess is this thing still is within the gravitational force of the June 16th low. That's $26.61. That's probably going to get tested, most likely. And the energy is about the same as the energy on the way down. So maybe that 26.5 level would be something you'd want to look at when it gets back there. Probably better lower hanging fruit, though, than that. But close to a bottom, I think. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.